Want to master trading? In this video, I'm breaking down over 20 trading strategies every trader needs to know. From simple indicators to advanced patterns, it's all here. Save this video so you don't lose it. Let's dive in. Support and resistance levels. These are flat lines on the chart where the price often reverses. Support is where buyers step in, pushing the price up. Resistance is where sellers take over, driving the price down. Look for price bounces. Buy at support, sell at resistance. For example, on the daily chart of Link, the price is bouncing off a support level. This is a buy signal. Use it in combination with other indicators for greater accuracy, and also check out a more detailed video on how to identify these levels. Dynamic support and resistance. Unlike fixed levels that stay put, dynamic levels move with the price. Moving averages, MA, and exponential moving averages, EMA, are perfect for this. When the price is above the EMA, it's a sign of an uptrend, and the EMA acts as support for buying on pullbacks. When the price is below the EMA, it's a downtrend, and the EMA becomes resistance for selling when the price approaches from above. Which periods to use? 200 EMA shows the big picture trend. Great for hourly charts or higher. 50 EMA tracks medium-term trends. Good for entering after pullbacks. 20 EMA for fast, aggressive trades or scalping. Keep in mind, higher periods give stronger signals but later entries. Lower periods are quicker but riskier with more false signals. Trend lines. These are diagonal lines connecting lower lows in an uptrend or higher highs in a downtrend. A bounce off a trend line is a signal to enter. For example, on the daily chart, the price touches the descending trend line, which is where we open a short position. I've got a video on my channel about drawing trend lines. Check it out to level up your skills. Momentum indicators. These tools measure the strength and direction of a trend. They're not great in flat markets but shine in trending ones. MACD. A reliable tool for spotting momentum and trend changes. It has two lines, an orange slow signal line and a blue fast line, plus a histogram showing the gap between them. If the blue line crosses the orange from below, it's a buy signal. If it crosses from above, it's a sell signal. Supertrend, a single line that changes color and position based on the trend. Green below the price means an uptrend. Red above the price means a downtrend, so sell. Parabolic SAR, dots above or below candles show the trend. Dots below mean an uptrend, dots above mean a downtrend. Enter when the dots switch sides, exit when they flip back. Moving averages, a core indicator that smooths out price noise and shows trend direction. Price above the average, it's uptrend. Price below, it's downtrend. The 200 EMA is the most popular for spotting the overall trend. The 50 EMA and 20 EMA work for shorter-term signals. Use moving averages as dynamic support or resistance for pullback entries, or to confirm trends with other indicators. Candlestick patterns. Candle shapes can predict price moves. Pin bar, a reliable candle with a small body and a long tail on one side. A long lower tail is a bullish pin bar for buys. A long upper tail is a bearish pin bar for sells. Example, price hits a demand zone, forms a pin bar with a long lower tail, so it's a buy signal. Engulfing, a new candle's body fully covers the previous one. A green candle covering a red one is a bullish engulfing for buys. A red candle covering a green one is a bearish engulfing for sells. Works best at key levels or reversal points. Doji, a candle with a tiny body, signaling uncertainty. It often hints at a reversal but needs the next candle to confirm. Hammer and hanging man, similar to pin bars but form after big moves. Hammer, after a drop, signals an upward reversal. Hanging man, after a rise, hints at a downward reversal. 3 white soldiers and 3 black crows, 3 consecutive bullish candles with rising highs signal a strong upward move. 3 bearish candles signal a downward reversal. Reversal patterns. These chart patterns signal a trend might end and reverse. They form after a long move, showing a shift in power between buyers and sellers. Head and shoulders, a classic reversal pattern at a trend's peak. Structure, left shoulder, that's a high. Head, it's a higher high. Right shoulder, that's a lower high. Break below the neckline confirms the reversal, often with higher volume. Inverse head and shoulders, the opposite, forming at the bottom of a downtrend. Double top, forms after an uptrend. 2 highs at the same level with a dip between. If the second high fails to break the first, it's a sign of weakness. A break below the dip confirms a downward reversal. Double bottom, the reverse, at the bottom. 2 lows at the same level with a bounce between. A break above the bounce signals an upward reversal. Triple top and triple bottom, similar but with 3 highs or lows. Why you waste time trying to grow a small account? With HashHedge, you can trade with real capital up to $100,000. It's simple, take the challenge, prove your trading skills, and get funded for real. Keep up to 90% of the profits. You don't need bigger profits, you need bigger capital. All the details are in the description below. Breakout patterns. Triangles, wedges, and rectangles form when the price gets squeezed in a range, then explodes in one direction. Flag. After a big move, the price forms a narrow channel against the trend. A downward flag after a rise is bullish. An upward flag after a drop is bearish. Pennant, like a flag but forms a triangle shape. A strong move, then consolidation in a triangle, followed by a breakout. Act fast and set clear profit targets. Triangle. Ascending, flat resistance plus rising lows. Breakout up signals a strong buy. Descending, flat support plus falling highs. Breakout down signals a sell. Symmetrical, narrowing shape with no clear direction. Wait for the breakout and trade in that direction. Wedge, similar to a triangle but both lines slope in the same direction. Falling wedge, price drops but slows. Breakout up signals a reversal. Rising wedge, price rises but slows. Breakout down signals a drop. Works for reversals or breakouts, depending on where it forms. Fibonacci retracement. Fibonacci levels help you find where the price might pull back after a big move and then continue the trend. It's a grid of horizontal lines for spotting entry points, stop losses, and profit targets. How to use it? Find a big price move and stretch the grid from the low to the high for uptrends or high to low for downtrends. Watch where the price pulls back and which levels hold. The 0,382 and 0,618 levels are the most reliable for entries. Harmonic patterns. These are geometric patterns based on Fibonacci ratios that pinpoint reversal zones. Unlike regular patterns, they follow strict proportions, making them great for medium and long-term trading. They need precision, so use an indicator if you don't want to draw them manually. Heikin Ashi. This special candle chart filters out market noise and makes trends easier to see. Unlike regular candles, it uses data from the current and previous candles for a smoother look. Green candles with no lower shadows mean strong uptrend. Red candles with no upper shadows mean strong downtrend. Candles with small bodies and shadows on both sides means slowing trend, possible correction or reversal. Renko charts. Renko ignores time and focuses only on price movement. A new brick forms only when the price moves a set amount, smoothing out small fluctuations and highlighting the trend. Oscillators. Oscillators show when an asset is overbought or oversold, great for flat markets or spotting reversals. They predict price moves rather than follow them, perfect for entries and exits. RSI measures the balance of price gains versus losses on a 0 to 100 scale. Above 70 means overbought, possible drop. Below 30 it's oversold, possible bounce. Around 50 equal to neutral, use as a filter. Stochastic oscillator, more sensitive than RSI, with 2 lines, K and D, on a 0 to 100 scale. Above 80 it's overbought. Below 20 means oversold. Line crossovers in these zones signal trades. Filter with trend indicators to avoid false signals. Commodity channel index, less common but great for spotting trend changes. Above plus 100 means overbought, possible drop. Below 100 means oversold, possible bounce. More volatile than RSI, so filter carefully. Divergences. When the price moves one way but an indicator moves the opposite, it's a divergence. If the price hits new highs or lows but the indicator doesn't, it's a sign the move is weakening, hinting at a reversal or pullback. Use with MACD, RSI, or Stochastic, especially at key levels or with candle patterns. Volume indicators. Volume shows how active traders are in a move. It's the fuel behind trends. Without it, candles and patterns lose power. Volume tracks total trades per candle. Use it to gauge activity. Volume oscillator compares current volume to the average. Shows when momentum fades, even if candles look big. On balance volume, adds volume based on candle closes. Rising OBV means buyers in control. Falling OBV so it's seller pressure. Heikin money flow combines volume and candle closes. Closes near the high with high volume equal to buying pressure. Closes near the low equal to selling pressure. Volume weighted average price shows the average price by volume. Acts as dynamic support or resistance. Price above VWAP equal to buy bias. below equal to sell bias. Volume profile shows volume at specific price levels, not time. Highlights where big players are active, perfect for spotting key zones. Supply and demand. These are zones where big players drive sharp price moves. Unlike support and resistance based on touches, these zones show where real action started. Price often returns to these areas to grab liquidity. Elliott Wave. This theory says price moves in cycles based on crowd psychology. Trends have 5 waves, 3 up, 2 corrections, followed by 3 corrective waves, A, B, C. Impulse waves. Wave number 1, early move. Wave number 2, pullback. Wave number 3, strongest move. Crowd joins. Wave number 4, another pullback. Wave number 5, final push, often with divergence. Corrective waves. Wave A, first move against the trend. Wave B, pullback, looks like the trend continues. Wave C, final drop, completes correction. After wave C, the market flattens or starts a new trend. Gann angles. Developed by William Gann, this uses angled lines to predict price moves based on price and time. Steep angles, 1/8, 1/4, 1/2. These are fast trends. 1 to 1 angle its main trend axis. Flatter angles, 2 to 1, 4 to 1, 8 to 1, are slowing the trend. These act as dynamic support or resistance. These strategies are your trading toolkit. Mix and test them to find what works for you. From simple levels to Elliott waves, they all work if you manage risk. If this video helped, smash that like button and subscribe. Drop a comment with the strategy you want me to dive into next.